Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is September 26th. This week from the Red Cloud Securities research team, Managing Director and Head of Equity Research David Talbot and Managing Analyst Timothy Lee are joining us to discuss the major events in their coverage universes. David, why don't you kick us off?
Thank you for that warm introduction. This week I wanted to discuss GoviEx Uranium. We have a buy rating and recently increased our share price target to 65 cents. And the company is an investment banking client of Red Cloud Securities. Now, GoviEx announced a very positive feasibility study recently for its 80% owned Maduela uranium project in the Republic of Niger. Life of mine production and uranium production rates are largely the same as prior, despite underground and open pit mining changes to help reduce costs. Now, the study contemplates life of mine production of 51 million pounds over 19 years, as annual production remains at 2.7 million pounds of uranium per year, with initial capital costs of $343 million US. This provides an NPV of 8% of $140 million and an IRR of 13.3%. The NPV was up slightly over the 2021 PFS, although a higher $65 uranium price is being used. Spot uranium prices recently surpassed $50 a pound, so we may need higher uranium prices before we get a production decision. That said, we view these results positively. GoviEx has kept costs under control in a very strong inflationary environment. It has impressed us that CapEx remains flat, despite adding an 8-megawatt solar plant, with a new milling process being implemented as well. Initial capital added $18 million for the solar plant, and the SAG mill has been swapped out in favor of a V-row liberator. This change should save both CapEx and OpEx, given that it needs less foundation work, uses less power, and allows for quicker maintenance. But the study wasn't immune to inflation. OpEx is up almost 20% to $31 a pound. This is on higher consumable costs and lower molybdenum byproduct credits. While mining costs remain relatively flat with a slight drop in the strip ratio, processing costs have increased primarily due to reagent costs, specifically sulfur needed for the sulfuric acid. Lower expected moly production is also hurting byproduct credits, and we believe this is mainly due to lack of assays, not a lack of moly. Thus, we estimate byproduct credits of about 70 cents a pound now, whereas almost $6 a pound was assumed in the PFS. There are ways that CapEx and OpEx can be improved down the road. Actual moly production providing byproduct credits is one way. Using a second-hand fleet for a 5-year operation in the open pit is another, and the study assumes that all this equipment is new. Management is pretty proud of the study, and we were impressed as well. It provides a self-sufficient project with an ESG aspect. While Maduela has access to the grid, the planned solar plant should provide flexibility. The project has its own processing plant, can make its own sulfuric acid, and management is committed to hiring a local workforce and using local vendors. The Maduela feasibility study is a major milestone for GoviEx. With technical and licensing aspects de-risked, management will now focus on project financing and arrangement of uranium offtakes. Meanwhile, expect exploration results from Maduela, Falea, and Matanga elsewhere. So stay tuned for more updates from GoviEx as it moves the project forward towards production, uranium prices willing. Tim, do you have anything for us today?
Thanks, David. This week, I will talk about drilling results from Tempus Resources, that's TMR on the ASX or TMRR on the TSX Venture Exchange. Tempus is a Red Cloud investment banking client, and the firm owns shares. Tempus reported 2 press releases with a total of 10 holes targeting the Blue Vein at its Elizabeth Gold project in southern British Columbia. Importantly, this drill program is consistently encountering the vein, stepping high-grade gold mineralization to a total of 180 meters of strike thus far. As well, several holes encountered multiple stacked veins, which bodes well for the tonnage potential. Highlights include the highest grade intercept yet from the project, with 311 grams a ton gold over 1.05 meters, including over 1,500 grams a ton gold over 0.2 meters. Notably, out of the 20 holes drilled to date at the Blue Vein, 7 have encountered intervals with greater than 1 ounce a ton gold. While not all holes encountered high grades, some variability is typical of this type of mesothermal gold vein deposit. Based on the results to date, Tempus is expanding the drill program to 40 holes, up from the originally planned 30, for an additional 2,000 meters of drilling. This program is designed to test the Blue Vein along a strike length of 400 meters. Depending on the receipt of assay results, the company anticipates completion of a mineral resource estimate for Elizabeth in the first quarter of 2023.
Thanks for listening to the Red Cloud Research Roundup podcast. We hope you enjoyed this dive into the recent notable mining news. Remember, you can join us every Monday for new episodes, and as always, you can head over to redcloudsecurities.com for full disclosures and to sign up to our email list. That's it for this episode. See you next time.